Good afternoon or good morning, everybody. Thank you guys for joining our webinar series. HostAllies and Clearing are presenting Tax Ready to Growth Ready with Vishal with HostAllies and Corey with Clearing. Did you want
Good.
to say a few things?
Sure. Good afternoon, everyone. My name is Vishal, I'm the founder and CEO of HostAllies. Over the last decade, I've been closely involved in short-term rental property management in various capacities. As an investor managing my own portfolio, as a property manager managing properties for others, and now as a provider of accounting and financial management services. I'm really excited to be part of this panel with Corey to share our ideas on how short-term operators can be ready for tax season, and then how they can set up a integrated financial management process that delivers them profitable growth in 2026 and beyond. With that, I'd like to Corey, introduce yourself.
Yeah, hello everyone. I'm Corey. I work at Clearing. I've been kind of with Clearing since, 3, 4 years ago before we even kind of went to market. And so I've kind of actually watched the industry change quite a bit. I think everybody now sees things about trust accounting, tax compliance much more now than they did 4 years ago. And, there's been a lot of conversation around revenue reconciliation, managing trust balances, understanding your trust account, and how it could be a lever for actually strategic growth. And I think, through the years of being involved in all this concepts and talks and the reality of actually building out software associated with it that's purpose built. I've learned a lot about this stuff, so I'm excited to talk today and bring some of that education to people that are, struggling with the end of tax season and trying to figure out ways to get better. So I'm excited to kick things off today.
Great. Back to you, Lauren. Do you want to cover the next slide?
Yeah, of course. So, for those of you who are new here, VRNation is a national organization with roots in the Pacific Northwest, originally founded in 2010. Our mission is to elevate the STR industry through education, networking, and advocacy with strong supportive community of property managers. We typically host a bi-weekly webinar series and a weekly podcast designed to help learning, growing, and keep you connected with others who truly get this business. And back to you.
Thank you, Lauren. I wanted to quickly introduce HostAllies and the philosophy behind our genesis, because that'll help you understand why our integrated playbook approach will make sense as we go through the webinar. Having spent 10 years in the trenches of property management, I saw firsthand how managing growth for a property manager while keeping profitability up is a real challenge. Back office accounting, owner statement generation, regulatory compliance, keeping all your financial records straight is more complex and time consuming than the public facing side of hosting. Uh, Property managers just don't have enough time in a day with all they have to take care of the guests, they have to take care of owners, they have to take care of the properties. There's not enough time in a day to go and do all these back office tasks and the amount of time it requires. Also, doing these back office tasks requires certain specialized skills. And we saw a gap in our industry. That is why I built HostAllies to help property managers manage their back office so they can focus on the front office. This way, our clients can grow their business and we provide them with the tools and reporting to ensure that they're doing it profitably. We go beyond bookkeeping. We help managers set up scalable accounting processes, everything from trust accounting, owner statements, operational accounting, financial statements, taxes, lodging taxes, expense management, and we streamline everything from onboarding to financial reporting. We recently announced a joint venture partnership with the fifth largest accounting firm in India, which gives us access to 1,000 plus accounting professionals and significantly enhances our ability to deliver to our clients. We serve multiple boutique short-term rental firms with 10 to 150 properties and also select large franchises. And we have an experience serving clients across a majority of PMS platforms. And in today's webinar, we will share some of those best practices that we've developed working with our clients to help you be ready for tax season and set you up for profitable growth. And with that, let me hand off to Corey so he can tell a little bit more about clearing.
Yeah, absolutely. Thanks, Michelle. So, I'll keep it kind of short and sweet because really the purpose today is education, not really selling, a software. But in general, what clearing is a purpose-built solution for short-term rental accounting. There's a lot of solutions that touch on accounting, but nothing that really, or very few that really go deep into the concept of accounting. And really, being a purpose-built solution with only one focus, our goal is to help property management companies close their books faster than they've ever been able to before. And so, we do things all the way from trust accounting to, expense management and allocating of money to the right property and stakeholder. We track liabilities like your security deposits, prepayments, taxes, so on and so forth. But all of this comes from a background of being hyper focused on accounting and realizing that not every property management company is going to be a one size fits all solution. Um, so building with purpose that can be used from a perspective of being able to do whatever different businesses need to be able to do and to be able to scale that is really what clearing's focused on. So we're excited to talk today just more about kind of taxes in general and kind of the process of getting to that year end. But if you have any questions about how you can elevate that experience or make it more efficient, we're always more than happy to chat after this as well. But I'm representing Clearing today. I've been with Clearing since the beginning, and I'm excited to share some of the knowledge that I've learned. So yeah, I'll pass it back to you there, Michelle.
Great. So let's talk about a few looking ahead into 2026. What are some of the trends we see? This slide highlights three STR trends that we need to watch and plan for. First, let's talk about the market outlook. While the market outlook is relatively stable, we know that competition and costs are rising. Demand, ADR, and occupancy aren't expected to collapse, but it will be harder to win each booking and to protect margins, especially all the changes that we are seeing across the different booking channels. That means operators who are coasting will start to feel the squeeze. Secondly, active revenue management is now a table stake. It's not enough to just set rates once a month and hope for the best. You will need real-time data, dynamic pricing, and integrated financial systems so that your pricing decisions are grounded in actual performance, not just what the OTA is suggesting. And finally, STR success requires professional financial discipline. This isn't a passive cash flow play anymore. The operators who will win in 2026 are the ones who are treating this like a real business, have very tight controls on their revenue management, revenue recognition, clear financial visibility, and strong operational rigor across the portfolio. So that's one of the things we will be talking in the second half of this webinar. But with this, I'll hand off to Corey to talk to you about taxes and why 2025 tax season is top of mind.
Yeah, absolutely. Do you want to just click again? I think some of the stuff's missing on that slide. Perfect. So it's always really interesting. This time of the year is always one of the most interesting time of the years for talking about accounting in general. You have a lot of people that are coming to, I talk to a lot of people about clearing. So you have a lot of people coming to us and they're saying, "Hey, I haven't been keeping up with everything I should have been keeping up with all year. And today I'm running into an issue where I need to get something done very quickly. Can your solution just be turned on and work?" And the reality is if you look at any solution across any technology ecosystem, there aren't solutions out there that you turn on and are going to do all of your accounting for you today. I mean, there's obviously a lot of promise with AI coming down the line and a lot of interesting aspects to consider there. But when you set up your PMS, you had to inform the system on how your business runs and how you want to operate and how you want to price and all those things. When you set up your cleaning and turnover tool, you have to inform the system. So I think a lot of people get trapped into I'm going to set up a new process and then I'm going to use this throughout the year. And then come tax season, it's going to be awesome. I'm going to be able to just close things off very quickly. But the reality is that you have to inform systems, be able to understand how your business actually operates. And so what tax season often ends up being is a forensic investigation. People had a lot of desire when they had the time to set up systems that can help automate things. And certainly clearing is a system that can take away a large percentage of the work that you have to do at the end of the year if you use it properly. You also have a lot of people that at that time of the year, the rest of your business doesn't turn off. So all the conversations with your owners, the questions that they're dealing with, the guest experience questions that you're dealing with, all of these things are still happening. Well, now you're trying to figure out how to close your books and you're having to figure out what you did with all these receipts or what you did with how should I be reconciling this revenue? All these questions are happening at the same time as all these other things that you deal with on a daily basis. And so What tax season really should be is, I mean, if you have a system set up that's purpose built, or you're using a PMS, or you're using other tools that are outside the industry and you built them yourselves, it doesn't matter what you're using at the end of the day. Tax season should be a review. You should be looking back at your entire year and you should be saying, here's my clean defensible financials. Let me pass them off to my CPA and they can close my books for me, essentially. The problem is that no one really gets to the point where they set up the automation that can actually, well, people do, but very few people actually take the time to get set up where they can come and get to a point where they're just, turning on their computer, they're looking through and reviewing what they're actually supposed to be verifying, then they're sending it off to their CPA. Tax season should be more of a strategic time. It should be talking about, okay, well, this was our last year. We closed off the year. Here's the taxes we paid them. Now, how are we planning to make this better in the future? And so, while a lot of intention happens, I think, during this time of the year from the conversations that I have, the expectation right now is I need a system that can do this for me because I'm not going to go through and do this all manually. And the reality is that can be done. It just takes time to set up. You need to inform the system. You need to know this. You need to know how you want to handle your financials. And you can get to that, proof point of, automation and efficiency at the end of the year if you take the time to actually invest into making sure that you have a process that does allow for that type of automation. And so monthly, reviews, weekly reconciliations, things like that are being done by the best property management companies out there in order to be able to go, oh, it's tax season, great. Let me review my stuff, send it off, and move on. Unfortunately, because this industry is so seasonal, I mean, in a lot of scenarios, you have such a big part of this market that is coming into tax season and they're thinking after this, after tax season, I'm going to focus on this. The reality is after tax season, you're running into your bit. A lot of people are running into their busy season. Putting it off is just going to compound. And really, what you should be trying to do is get to a point where you have the time, you've invested into a solution that's purpose built for handling trust accounting and can do this with automation and more efficiently than ever before. And then you can invest that time and it's going to pay dividends the next year come around. So, before we can focus on 2026, I think still so many people are still thinking about 2025. And I think Vishal has prepared something that his clients use to kind of go through this process with them.
Yeah, and we thought that many of you, like Corey said, are in a situation where you're still closing your books, struggling to be prepared for your taxes, or you may have not fully, right? So what we did is we said, maybe we can give you a tool that will solve it in a day, but we can give you a checklist that allows you to go step by step and work through this. And with that knowledge in mind, if you actually work through this checklist, very quickly you should be able to solve it. So we'll talk about a checklist. We'll also talk about a process. But let me start with the checklist first. The checklist has multiple components. Starting on the top left is bank and trust account reconciliation. This is a non-negotiable. Every operating and trust account must be reconciled till 12/31/25. The ending balances must match the accounting system, and we shouldn't have reconciling items older than 30 days. We also have to confirm that the owner funds are not commingled with operating cash, and that the trust bank balances are actually matching the total of trust liabilities, whether it be owner liability, tax liability, or advanced deposits. So this is a very important building block in getting your closeout done correctly. The next is a booking level. At the booking level, you need to make sure that every reservation has gross rents, cleaning fees, channel fees, taxes, net payouts clearly broken out. And then the OTA payouts that you're receiving through the payment processor must be matched to specific reservations. There shouldn't be any orphan deposits, refunds, or cancellations that need to be accounted for. You also need to make sure that your 2025 bookings or stays and 2026 stays are clearly separate so you avoid revenue bleed across the years. Once you've worked through your bank and trust reconciliation and your booking reconciliation, the next thing is expenses. This is really important to make sure your spending is clean. Your expenses are consistently categorized. Your property level allocations are done. And your owner versus company expenses are clearly separated. We should avoid dumping items into miscellaneous because miscellaneous could mean a lot of different things. We should also try to attach receipts for all material expenses in case there is an audit. And you want to flag any kind of capital improvements so they are not expensed incorrectly. So those are the first three. On the right-hand side, we're going to talk about some of the more compliance steps. Taxes. we should ensure that we're tracking occupancy and lodging taxes separately. Ensure that liabilities for these taxes are either remitted or accrued at the year end, and they are part of your trust account liabilities. And you must exclude any kind of OTA collected taxes from your revenue. So that's a very important step from a tax filing perspective. Let's talk about payroll, contractors, 1099s. The payroll expenses you have in your financial account needs to tie to the provider reports. All contractor expenses need to be clearly identified. You need to have already collected the W-9s by now from your contractors or your owners, wherever they are needed, right? And there's a simple framework to say, okay, who needs a W-9, who needs a 1099 or not? We can talk about that later. But it's very important that when you produce 1099s, the totals of the 1099s and the 1099s sort of align with what your year-end statements are. They're not going to match, but you should be able to have the data to back up and explain what the differences are, because owners always ask questions. Let's move on to a little bit deeper into owner statements. You need to make sure every owner has got a year-end statement, and the balances on the statement ties to the trust account liability. All the distributions for the year-end statements are properly recorded. There shouldn't be any negative owner balances, but if they do exist, it should only exist if the contract allows. And I want to make sure that the management fees are actually matching the agreement. If once you've done all of this, then last and final check is the balance sheet sanity check. You want to make sure that there are no negative asset accounts or unexplained balances in clearing or suspense accounts. You want to make sure your credit cards are reconciled, loans and merchant advances are properly classified, and all the accrued liabilities are reasonable and documented. If you follow these steps, I can tell you most of the problem areas should go away, and you should be able to submit those financials to your CPA or whoever is filing your tax returns with a lot of confidence. So this is what you should accomplish. The checklist is what do you need to do to get 2025 closed. Now, Corey and I are going to talk to how you should do it. But
Well, I was just
before,
going to say,
go
as well, Michelle, is that if you're reading through this and you start to realize that a lot of this is just repetitive stuff you should be doing on a certain whatever you want. Most people in this industry obviously do it monthly, but a lot of this stuff can be worked into a process. And when you have a process, automation can really shine. And so this is a really good way of laying out basically like what do I need to do? Build a process around it and make it part of your day, make it part of your month. It's going to save you time at the end of the year.
That's perfect. And if you've not done it so far, here is first of all, if you like this checklist, you can download it. You can take a snapshot of the QR code, or you can go and download it on that link. But it's for you to use as a helpful guide. But what Corey and I are going to talk about next is even this checklist implementing it requires a series of steps on how you get it done. And I'll talk through some of it, and Corey will talk to some of it. So the first step, the triage. Before you can reconcile 2025, you have to organize your data. You cannot fix a receipt soup, right? One transaction at a time. So start with centralizing all your data. Pull every bank statement, credit card statement, OTA payout report, booking financials, expenses for the entire year. Secondly, separate church and state. If you've been commingling personal and business funds, identify every personal transaction in the business account, code them as an owner draw, and immediately get them out of your P&L. Finally, establish a source of truth. Your bank account is your reality. Your PMS is your intention. Sometimes the PMS might say you have made a lot of money, but if it doesn't match with your bank, the bank account typically wins, right? So that's the first step. The second step, now that you've got the data, the second step is about the cleanup, solving the revenue gap, the expense gap. The biggest show in the STR accounting is usually the discrepancy between what the channel says they paid you versus what actually hit your bank. It's really important to practice correct revenue recognition. One example is you need to separate earned versus unearned revenue. So if a guest is paying you in December for a July 2026 stays, that is a liability on your balance sheet. It's not taxable income for 2025. It's one simple example that I was giving. Then you need to perform a three-way reconciliation for your trust account, your trust ledger, your individual owner ledgers, and your bank statements. You have to make sure that these match. And if they don't match, you likely have a trust leakage issue, right? And in this particular case, you could use a tool that is purpose built for this, something like clearing, so that you can tie all your bank deposits back to specific booking IDs, and you can significantly speed up the process. And I'd like to ask Corey to speak to you about how specifically clearing can help in this. So back to you.
No, absolutely. I mean, you hit the nail on the head. I mean, the the amount of people still that are pulling bank statements, pulling data from all their different tools, the PMS, pulling data from all the OTAs into spreadsheets and still matching would shock most people, I think. The reality is that combining and centralizing all that data was always a challenge for the last 3 years. It's becoming more and more available, but at the same time, there's a lot of depth that goes into actually properly allocating the actual stakeholder and the actual property in an efficient and automated way. And so programmatic approach to this is definitely going to save you time. I mean, at the end of the day, some people that are manually reconciling are spending hours and hours and hours of their week and day or month or whatever, whenever they end up doing it, literally going through line by line bank statement and saying, oh, this one should match with this. But what happens when this number doesn't match to three combined bookings that you think it should match to because channel fees have been taken out or commissions have been taken out or there's a resolution or an update on the PMS that didn't sync with the OTAs, and these challenges become very difficult to kind of diagnose. So you're going through and you're kind of going as deep as you can into the statements and into your bank accounts to figure out what's what and where should it all be going essentially. And so our role basically is to make that more efficient. I mean, not we have a bunch of other stuff we do on the expense side and on the reporting side and on the reconciliation side. But when it comes down to it, like when we're talking about the revenue gap, our job is to make that something that you don't have to spend hours on. You can come in, pull the date range you're reconciling, and it's done. It programmatically matches the bookings for you. It doesn't only match the bookings though. It also is telling you exactly which stakeholder each fund is supposed to go to and which property that should be allocated to. Because in your trust account, you should always know every single dollar in there. You should know exactly which property it's related to and exactly which stakeholder, vendor, owner, management company, taxes, who is that going to and why. And so you should have defensible proof about that. And a system like Clearing does that with automation to do that for you essentially. And so I would say that's one of the bigger time spends that we see in the short-term rental space when it comes to closing off a month end and creating owner statements. It's really getting that reconciliation rate because don't go paying an owner on something that's not reconciled, because when it comes down to it, getting money back from an owner is a million times harder than sending them that money.
That's great. So let's think about it this way. Now you've done step one. Assume you follow through and do step two, whether you're doing it yourself or using a tool like Clearing. Now it comes to step three, which is about optimizing. You've got a clear financial statement, you've got your clear trust account, you've got the owner statements. Now you need to think about how do I maximize my deductions from a tax perspective, right? Think about repairs versus improvements. Think about any kind of opportunity for you to deduct expenses so that you can actually limit the amount of tax that you're paying to the accurate amount. The other piece is 1099 readiness. You need to verify that every vendor that you have paid more than $600, as long as if they're not a corporation, right? They're an LLC or an individual, you typically would have to file a 1099 for them. So if you've not asked them to provide the W-9s, you should be doing that now and taking an extension so that you can actually get your 1099s filed in appropriate time, right? And that's also true for owner 1099s. Finally, you need to create a paper trail for everything. Every expense needs a receipt. Every revenue needs a receipt, so that if you hand this off to your CPA or whoever's filing your taxes, you are actually accomplishing three goals. You've got accurate trust, so you don't get sued. You get clean financials, so you know exactly how much money you're making, and you've made all the deductions so you can optimize what tax you're paying. So this is how this process needs to be attacked. Even if you have to do it in a quick way, this is going to be very helpful to follow these three steps. Corey, you were saying something.
I think at the end of the day, it really comes down to building out the process. Nothing, I mean, you're never going to have a scenario in accounting and short-term rentals today where you can log in and get everything you need without doing anything. So building a process into it, how do you handle putting your receipts into a software that then indicates that directly on your statement for you? So when you send statements, the receipts are there, no questions asked, you have that paper trail. How do you reconcile the bookings to the revenue in your trust account? And how do you keep that separate from your business? And how do you pay your business out of that account? And how much is that account sending your business? Because these are all questions that people are faced with every single day. And building a process and creating automation around that process and standardizing it across your business is just going to save you it's just going to save you tons of time at the end of the day. So I think it's if you have a little bit of downtime right now after this tax season's done before you get into that, summer kind of rush, you can't make a mistake building out a solid process to make this easier for you next year.
Thank you, Corey, for excellently setting up the next section, because that's exactly where we're going to be. So far, we've covered is what you could do to fix your 2025 taxes and make sure that you get your setup for this tax season. But in this next section, we will talk to you about a playbook, an integrated, automated playbook of how all of these things can be done in a way that it's not taking up hours and days of your time, right? And the clean data is the engine, but the integrated playbook is the vehicle by which you're going to get there. So before I get to the playbook, I want to introduce just make sure that two concepts are very clear. First of all, let's talk about short-term rental accounting practices. Many people understand trust accounting, some focus on financial accounting. Very few people do them both right, but these are both very, very important. Financial accounting, these are distinct but interrelated streams in property management. Financial accounting answers the question like, how profitable is my management company? Are my costs going up or are they going down? It covers all the business's money, income, expenses, taxes, and operational reports. Trust accounting, on the other hand, is about stewardship. It's when you're managing money held on behalf of owners, guests, and other stakeholders. It means carefully tracking funds, staying transparent, maintaining compliance, and generating frequent owner statements. Trust accounts are highly regulated, reconciled often, and any mistakes can impact your credibility. So if you're new to this property management business, it's crucial that you don't blur the lines between trust accounting and financial accounting. Both these practices support a healthy business growth, reputation, and legal standing. Think of this slide as your accounting map. Keep these both parallel systems strong will build your business on a rock solid foundation. And by the way, if you didn't know this, this is highly interconnected because the data that feeds your financial account, your revenue, comes from your trust account, from the allocation that you get. And sometimes the expenses that go into your trust accounts, owner statements, come from your financial accounting. So these are interrelated and connected in various different ways. Now, why it's important to get these two right, and I love Corey to weigh in, but first of all, if you're not segregating the funds, that your funds versus the owner funds, you're not meeting your fiduciary duties. And you can have a lot of legal violations for which you can get sued. Secondly, if you're not maintaining the compliance and the accuracy, you don't have a good view of your financial health. Because you could be thinking you're making a lot of money, but you're actually not, right? So by doing these two right, the owners that you work with will see transparency. The regulators will make sure that they see that you're adhering with the laws, and you can clearly see whether you're making money or not making money and what changes you need to make. And finally, this discipline impacts your business valuation. Whenever it's time to sell your business, you want to raise capital to expand, clean books speak volumes. In conclusion, if everything is consistently tracked, the sky is the limit for how much you can grow your business and building long-lasting trust. But doing this in a manual way is very hard to, like, if you do it in a manual way, month over month, the fatigue sets in and you're not going to do it right. And then at the end of the year, you are going into the same situation with 1099s and tax filings and you're trying to play catch up. So this is where we want to talk to you about this integrated financial management playbook, a technology-driven, integrated trust and financial accounting solution can deliver you the clarity and control you need on your finances. This clarity and control, it comes in three major areas: automated revenue recognition, smart expense management, and airtight asset and liability oversight. With all these processes syncing transparently across your trust accounting and financial accounting system and your PMS, you could unlock new efficiencies and avoid these common accounting pitfalls. By using the reporting capabilities in purpose-built tools like Clearing and QuickBooks, you can monitor your compliance with your trust account, and you can also monitor your financial results. The outcome by implementing an integrated financial playbook is you spend less time on accounting issues and corrections at the end of the year and worrying about your taxes, and you spend more time on enhancing the guest and owner experience and with better financial visibility that you can trust. This is how successful STR operators scale profitability and securely, by establishing this integrated process that is largely automated. And we are going to talk you now through the aspects of it. So let's start with the
What
revenue.
one
Go
thing
ahead.
that one
Go ahead.
thing there, Michelle, that I just wanted to add is, it's not enough anymore for a property management software to pass data into QuickBooks. I mean, at the end of the day, it needs to be a two-way sync. It needs to be communicating back and forth. And I think everything that comes in to that last slide that we were on before this, and also talking about this in general, an integrated playbook needs to have communication going both ways. We're not at the point in this industry yet where there's a purpose-built solution for both trust and operations. Not saying that's not coming, but the reality is that QuickBooks and tools like QuickBooks in general are built for businesses. They are the best in class that's available for businesses. There's a lot of people and accountants that won't move off these tools. And so the reality is, if you're not going to move off that type of a tool, you do need to have communication going both ways. It's just going to change everything for you, especially when it comes to billable expenses and especially when it comes to management disbursements.
Yeah, I can tell you, integrating QuickBooks into Clearing to get your owner statements out and all the expenses automatically populated is much better than Excel spreadsheets and pieces of paper, right?
Yeah.
Because so there's no traceability there. But this is exactly where we are going. On the next page, I'll speak about revenue recognition. Corey spoke about it. This is the biggest pain point around, and this is where most of the time is taken. If you are in during this tax season, you can reconcile your bank deposits to your booking IDs. What you should do is in 2026, you should streamline your revenue recognition between your PMS, your trust, and your financial accounting system. And how you do that is you do monthly or weekly trust OTA to trust reconciliation. You make sure that your owner statements match your actual cash position, and you create consistent revenue recognition across your trust and financial accounting system. Um, the benefit of this, obviously, confident owner conversations, defensible numbers, faster decision making. But I want to ask Corey to actually show you how this entire integrated approach can happen between a trust accounting system, a PMS, and I'll hand off to Corey to explain this with a real example.
Yeah, I mean, I think we've chatted on this a little bit so far, but just to kind of put it into one slide and kind of give you like a source to go to and to understand this approach in general. I think this really outlines it quite well. So, I mean, you have different sources of data, right? You have your property management software saying something, you have your payment processor saying something, you have your OTAs saying something, and all the OTAs are not standardized at all, which is a huge problem because you have Airbnb paying out on check-in, you have Verbo paying out in different ways, you have systems that don't have APIs, so you're going to have to deal with a spreadsheet regardless. Um, all of that, then there's the banking and credit card information of the actual, source of truth of what's happening in your business. I mean, that is your source of truth. There's no if, ands, or buts about it. That is the reality of the money that you're holding. And so all of this needs to come together and it all has to be dealt with in a three-way kind of approach to it. I say three-way when I say payment processors, OTAs, kind of lump sum that into one thing. But the reality is you got your PMS saying this is what a booking should receive. You got your OTA saying, well, this is what we paid them. And then you have the bank account saying this is what you actually have after it's all said and done. And so why it's important to have all sources of data in one place is because if you don't have all sources of data in one place, you can't automate it. So programmatic approach to actually reconciliation in general requires that all these pieces are talking to each other. And so that's really why an integrated revenue recognition approach makes a lot of sense. And then as you're breaking it down and you're using, tools like clearing or purpose-built solutions for trust accounting, it's indicating and coding for you how things are then going to pass through to QuickBooks or to a different accounting system, or what you have to pay to your management company, or what you have to pay to taxes. So all of this kind of lump sums into a programmatic approach to dealing with the integrated revenue. And because you have these three different components, you have your financial accounting, your trust accounting, you have all these three different systems that are kind of operating and communicating with the business from a bank account perspective. Centralizing all that data, not only does it make it easier and allows for automation, it also allows you to say, hey, I'm leaving my PMS today. They're not keeping up with what I want. I want to use something else. Well, disconnect clearing from your PMS, go reconnect it to something else. You haven't lost any of your historical data. You haven't lost any of your rules. You haven't lost any of your setup around your strategic approach to how you do your accounting. You turn it on and you go. So it's really important to keep all of this. I mean, I have a biased opinion, I guess, there, but I think it's super important to keep all of this kind of as a financial brain that you take with you, and you don't lose this automated approach to the integrated revenue recognition that we're talking about.
Great. Thank you, Corey. And I think when we now shift from revenue recognition to expense management, it's the same thing, the programmatic automating approach. If you have in 2026, if you're going to make a shift, you need to enforce separation on owner versus property management versus reimbursable costs. And you need to set up an automated process where the expense recognition is not happening in spreadsheets and Word documents and through manual journal entries. Is happening in an automated manner. And more importantly is real-time visibility and control. So I will walk you through an example of what this actually means in reality, right? So think about this. With the right tech stack, expense management can become manageable. In short, when you bring order to expense management, you just don't save yourself headaches. You create transparency and trust that owners value most. Just like with revenue, integrations can handle the heavy lifting in expense management, but you have to sync certain tools and like task and expense systems to your trust accounting and your operating financial accounting system. And then you need to set up rules to automate categorization and approval workflows. Let's discuss expense management. RAMP, it's a tool that helps you capture receipts, code expenses properly, control spending. Instead of chasing invoices or wondering which statement something belongs to, the state system automatically routes and categorizes those expenses. Now, if RAMP is integrated into clearing, which is your trust accounting system, and QuickBooks, then it's amazing because every dollar has a trail now from the moment it was spent to the moment it gets reconciled. That's what eliminates the pain point we saw in expense management. Next thing, let's talk about task management system. I'm using Breezeway here as an example. For many managers, expenses don't start with accounting. They start with the work order. A guest calls about a broken appliance or a property needs preventative maintenance. By integrating your task management system with your accounting, every expense is tied back to the original job. Breezeway, that means you know why the money was spent, which property it belongs to, and you can hold vendors accountable. No more guessing where the charge is overhead or property related. It's baked into the workflow. So bringing these expenses into clearing and QuickBooks or trust accounting software and financial account creates transparent records. And then you can also gives you real-time visibility. Real-time visibility is really important. If you do this in a manual way, you don't have real-time visibility, you cannot control bad expenditure, or you can't improve versus what you did in the past. So I'll move forward because I think we want to leave time for Q&A.
Yeah, I'll just say one thing here too, Vishal, before we move forward. But it's not even, it's really about if you take a step back and you look at the expense management ecosystem in general, you have purpose-built solutions that exist. You have world-class tools that are, growing like crazy. Ramp, for example, has like a X billion-dollar valuation, and they didn't have a web application years like 3 or 4 years ago. Like the expansive growth in fintech related to expenses is incredible. And there is going to be more and more people in different ecosystems of big multinational corporations, software companies that are going to try to come into the short-term rental space. And property management companies are always looking for better ways to handle their expenses. And so it's really interesting to see, like, I'll talk to people and I'll hear of a new tool every single day. And so having the ability to centralize that data and have the ability for you to choose what you want to use in your technology kind of stack, is super important. And so being able to centralize this again outside of into a purpose-built trust accounting solution can only make it easier for you to work with these tools that are inevitably going to be coming into our space.
Great. Thank you, Corey. And the last and final thing you should not focus on, actually focus on balance sheet, right? And so coming out of 2025, you should have reconciled your trust ledger and have a clear trial balance. But what you absolutely want to do in 2026 is have clear segregation of funds. Don't intermingle your bank accounts operating in trust. Separation of liabilities. You need to be able to separate your trust liabilities from your property management company liabilities. You need to do monthly reconciliation. You need to plan for the timing mismatches that's going to occur. And you need to track cash all the way so that you can know that you have enough cash to support your growth plans. This will give you growth without stress, and it'll give you strategic freedom. And that's why I want to come back and close with this playbook, right? Revenue recognition, automated, use it programmatic techniques, expense management, integrate the right solutions together, get it, see the expense through and through, and asset and liability. You need to create that the system of clear separation. We have seen many clients implement this and have seen lots of different benefits, like operators who reduce month-end close from weeks to days. I want to give you one particular example, and then we'll jump into Q&A. In April, we started working with this one particular client. They were 2 years behind on their financial accounting and taxes. They had no idea what their current financial position was, and they had glaring issues all over the place. Our first goal was to help them get their 2024 books completed and taxes filed. We then jointly implemented clearing to get their owner statements accurate. We then streamlined their expense management system, kind of like what I showed you earlier. And finally, we integrated clearing with QuickBooks. And from June, all the revenue in their P&L was being recognized in an automated way through journal entries, and we could produce accurate P&Ls. And finally, we attacked their balance sheet and their trust account reconciliation. And I'm very happy to say over the course of 6 months or so, we've accomplished quite a lot. Now the client can reconcile their trust bank and liability with almost 100% accuracy, and they know exactly what their financial position is. Number two, over the last few months, because of the strong controls that they have put in on their expenses, they're making a lot more profit now than they were making before. And finally, their monthly processes got dialed in. Owner statements go out on the 7th. The management allocation reports come out by the 9th. The trust gets reconciled by the 12th, and financial statements can get produced the 20th. Month on month, it changes. But that process has become a constant recurring process, and it is helping them get a lot more better month over month. So this can be done. The lesson here is within a few months, it's possible to go from unreliable, messy financials to accurate and trustworthy financial statements that will support your growth and also help you make more money as you're growing, right? With that, I think we can open up to Kevin. Hi, Kevin.
Hey,
If you would like to, we want to go into Q&A. We have 16 minutes. I hope that's enough.
I think it's great. So thanks again to Vishal and Corey for all of this really good information, right? Like, go back through this presentation, take notes, ask these guys questions, because this is truly, truly important. For so many reasons, and I won't rehash it, but it's really, really important, and it helps you get your life in order, right? So big thank you to Vishal and Corey. First question we got in the chat. It says, when you say tax season is a stress test, what are the top 3 red flags that truly signal a business is not ready for growth? And I'm paraphrasing a smidge, but that's a big question. That's a tough one.
I would say that And Corey, I would love for you to jump in, but my main thing is if it's January and you have no idea what your finances look like, right? And you're not even sure that if you have a financial report, you have no trust on the fact that is this the money that's truly what you earn, or is it owner money, or is it taxes money that you haven't have and that you're sitting in your bank account and there's no accountability, then you're not primed for growth. Secondly, if you start to do your 1099s to your owners and the owners started calling you and saying, this is crap, I don't believe any of this stuff, then you know that you have a situation where you don't know what you're reporting to your owners. And finally, if you start to see that if you can get to that visibility that your liabilities are kind of exceeding your assets, then you know you've basically used up your trust dollars, and you may be in a situation where you need to go find a bank to lend you money. So those are the three big red flags that I see: the 1099 issue, your trust liabilities being higher than assets, and not being able to get a clear picture of your financials.
Good call. Corey, you got anything to add?
I mean, I was going to say very similar things. I think one of the, I'll take the approach more of like what I hear a lot of from prospects looking for a better solution, so that they can grow, because they often come to us and they're thinking, we're not ready to grow. It takes us way too long to do this type of stuff. How can we grow, essentially? I think Vishal did a really good job at, from an accounting perspective, what you should be looking at. I think from a property management company perspective, if you don't know how much you should be paying your business at the end of the month, the amount of times I hear people saying, we have all this money in our trust account. We don't pay ourselves anything because we don't want to screw up what we have in the trust account for the owners. We pay, basically haven't took money from the business for X amount of years. I mean, there are a lot of people that do short-term rentals as a portfolio, but have other jobs and do other things as well. And in those scenarios, they likely are trying to take these roles to make them their future kind of business that they focus on, but they don't take money from the business at the time. They're just keeping everything in trust because they don't want to make mistakes. This is kind of like a common thing I see and a common thing I get asked about. Another thing would be owner balances, of course. If you can't confidently understand what's in your trust account for which stakeholders need to be paid, like Vishal already kind of mentioned, it's only going to get more muddy, and it's only going to get more difficult to figure out as you add new property management or new clients to work with. And then I think the third one that I would say as well would be, I mean, if reconciliation of a booking is a foreign concept to you and you haven't been reconciling your bookings and you've been paying your owners out, I can tell you confidently you're probably already out of trust balance, and you should definitely focus on getting that fixed first.
Yep. Yeah, I would say the big word, and you guys said it 1,000 times, is process, right? Because I think you have a process that leads to, then you install systems that will enable that process, and then do it in a timely manner. That's kind of one of the things that I got from this conversation. And like I would add to what you just said, Corey, on the owner balances, like if you're reviewing that on a monthly basis, if well, you know what that balance is. Is it positive, right? And you're going to be paying it out, or is it negative? And that owner actually owes you money, and you're fronting that money to the owner, and you're the bank, and you're not earning interest on it. That is a bad situation to get in, and if you're not reviewing it, you're going to get screwed.
Yeah.
Do you have any other questions out there? I can't see them.
I don't see any.
Mhm. I would add one process thing for 1099s, and it's really, really simple. You just don't pay a vendor or an owner without a W-9.
That's a good point.
Just don't. Just
Yeah.
stop. Like, hey, if you want to get paid, you submit your W-9, then you complete your W-9, put it into QuickBooks or into your PMS, and then when you come do your 1099s, you're good. You got Social Security numbers and whatever. No, just make that process. Just don't do it. Don't pay them.
Totally makes sense. One thing I'd add is like do your tin matching, however you're doing it. If sometimes you get people to fill up the wrong information, and then then it becomes a pain. So if you actually go into the software and match it to make sure that this person gave me this social security number, it matches, systems will validate for you. That's an important step before you actually pay the 1099.
Yep, that's great. If there's not any other questions, maybe we can give people a couple minutes back.
I think one just came in
Oh,
actually
look
there.
at that.
Yeah, it
Perfect.
just said I'm not sure who it's for, but it says, "Do you work with Canadian companies? Clearing works in Canada." I'm assuming this might be more for Vishal though. So um, go ahead and
We absolutely have a Canadian operation, and we have team members in Canada. We support, we have full knowledge of the Canadian tax process and the all the financial laws.
Perfect.
And we have live clients in Canada.
Awesome. From a VRNation perspective, unless there's other questions, maybe just to quickly wrap up. So first and foremost, thank you to Vishal and Corey for all the really, really great information. So thank you, thank you, thank you. As Lauren said, this is kind of what VRNation does, right? This is a free webinar. We do a slew of these. It's all about education and making the vacation rental life a little bit better, a little bit more informed in different ways. We have a whole educational series that is coming out very soon that is very deep and meaningful. I would be remiss if I did not mention, as part of VR Nation, we also have these things called road shows. You might actually get to meet Corey or Vishal at some point, or someone like them, where you can sit and talk and discuss these things. We have road shows. One is a big one tomorrow in Phoenix. It starts at 10 a.m. It's free. There's another one coming up a little later in May, May 11th in Chattanooga. And in between, so those are road shows. It's a day, it's kind of like a mini conference. Think of it that way, right? You come, you meet other vacation rental owners, you meet some vendors and learn what's going on in the world and going on with their software, or different tools. And then the biggie is our annual conference, which is April 28th through the 30th in Denver, excuse me, not December, in Denver, April 28th through the 30th, the big annual conference. So please come and join us and get all learned up. So thanks again to Vishal and Corey. Seriously, thanks. A lot of information here. So.
Thank you. I'll just close with like our information. But first of all, if you guys, any of you are need any help with setting up this integrated accounting playbook, you can book a free session with us at HostAllies. We'll also help you with tax readiness and that. So just use the QR code, and we'll talk about it. And I'm sure we can pull in Corey because he can tell you about the system aspects of it. So contact us, and we'll be ready to help you with this. And with that, big thank you. And this is my contact. Feel free to reach out to me directly. Obviously, Corey, and you have the last word.
I mean, thanks for having me. I always enjoyed, helping property management companies, but also joining communities that are doing great work like VRNation and HostAllies. So yeah, appreciate everything. And if you ever have any questions, feel free to reach out.
Thank you, everyone. Thank you, Kevin. Appreciate this.